As the market opens up for 29th August 2022, many times the expectation build-up is more exciting than the repositioning of the markets post-event. Yesterday's Jackson Hole speech by Fed Reserve Governor Jerome Powell was one such build. But the Fed chief has clearly stated that combating inflation with attendant pain will be his priority over spurring growth. The Nasdaq 100 has already shed 4%, and we need to wait for Monday for more responses or the action from the market. The benchmark US 10-year bond yield has risen to beyond 3.03%. Gold has slipped to $1,737 per ounce, while Brent firmed up to $99 per barrel. World over, when central banks are attempting to rein in inflation with rate hikes, China has attempted a frantic, contrarian rate reduction approach to tide over the continuing drought, and also the spillover of hydropower shortage. During the week, rupee continued to trade below 80, and the Reserve Bank's staunch defense of the rupee was also evident, with the weekly forex reserves for the last week dipping by another $6 billion. If this central bank defense is to be assumed, in the coming week too, rupee could be in a range-bound tunnel against the dollar. The Nifty has shed 200 points week over week, and the derivatives contracts expiry for the month end on Thursday also got over without much swings. The indices are reflecting supportiveness, but the mute question is, how much negativity will they be able to shrug off? Put differently, I may say the rallies could be short-lived but more frequent. Friday's all the four bond auctions sailed through without any devolvement on the primary dealers. Indian 10-year benchmark yield was range-bound at 7.21%. But week over week, the 3-year interest rate swap points have firmed up by 14 basis points to 6.35. It gives me a sense of accomplishment when I prepare to engage with you next week for the 101st time. Have an interesting week ahead.